This video is going to cover audit documentation. The auditor's objective is to form an independent opinion on the financial statements. In order to do this, they must gather sufficient appropriate evidence, perform audit procedures, and follow auditing standards and ensure ethical behaviour while carrying out their work. Auditors must prove they have carried out their work properly. They must therefore gather as much tangible evidence as possible so they can back up their opinion. ISA 230, Audit Documentation, states that the auditors must ensure they have written documentation that proves that the audit was planned and performed in accordance with auditing standards and any other legal requirements. Helps the audit team plan and perform the audit. Helps more senior members of the audit team direct and supervise as well as review the work completed. Is a sufficient appropriate record of audit work completed to assist in forming the audit opinion. Assists future audits and enables the audit team to prove they did the work. Therefore, audit documentation needs to be detailed enough to ensure auditors can show evidence that the audit was conducted properly. For every audit client, the audit firm will keep files to organise the documentation collected. There will be a current audit file which will store all relevant evidence and documentation relating to the current audit. And there will be a permanent audit file which will store all client-related documentation that would be useful for current and future audits. This would include previous year's financial statements, client organisation structure, key personnel, contact details, and so on. All correspondence must also be stored so there is a trail of evidence that proves that communication between the auditor and the client is effective. For most audit firms, these files are now electronic. This is a more secure option of storing the information needed, plus it saves space in the office, which can reduce administration costs for an audit firm. The current audit file will back up the audit opinion. It should be completed in a timely manner over the course of the audit process, with the finalisation of evidence just after the audit report has been signed. These files must be retained by the audit firm for a minimum of 5 years from the date of the audit report. This enables the auditor to prove what they did, for example, if the client was to take legal action against the audit firm for negligence. The current audit file has 3 main sections: the planning section, audit performance, and completion. The planning section will document all of the considerations made during the planning stage and clearly show the direction the audit should take. The audit planning document must prove that the audit team planned effectively and will include the following: an assessment of materiality and performance materiality, details from the analytical review performed at the planning stage, key audit risks, background information regarding the client in understanding the entity, any specific laws and regulations, staff booked for the audit team and budgets set, the overall audit strategy, and deadlines set to ensure the audit process is completed on time. We can see that this is a very detailed document which reflects the importance of the planning stage. If the audit is not planned properly, it may cause significant problems later on in the audit, including possibly forming an inappropriate audit opinion. The audit performance section will include all documentation and evidence collected that relates to the audit procedures carried out. These are the audit procedures carried out on the systems, transactions, balances and disclosures relating to the financial statements. The audit procedures are carried out when the audit team is out at the client. The team must ensure that they can prove this work was carried out properly. Without this work and the evidence collected from it, the auditor cannot form an opinion on the financial statements. For every test carried out, the auditor needs to prepare something called working papers. These are several documents organised to prove the balance in the financial statements is true and fair. To illustrate, let's pick the bank and cash balance in the financial statements. The working papers relating to this will include a lead schedule, backup schedules, and audit programs. The lead schedule is the first document seen in the section for each balance. It will show the total balance which will agree with the balance shown in the financial statements. Therefore, for this example, it would show the total bank and cash figure shown under current assets in the statement of financial position. Behind this will be the backup schedules. These will be individual schedules for each sub-balance, which makes up the total balance in the financial statements. For example, if the client has 5 bank accounts and a petty cash float, there will be 6 backup schedules, one for each individual balance. They will all total to the front lead schedule. Then behind each of these backup schedules will be the audit programs. These are the detailed documents which explain the audit procedures carried out on the balance. They will be separate tests carried out on the current bank account, savings account, etc. Each of these tests will have a sheet explaining the test and its outcome in detail. Each audit program must show the following: the objective of the test, for example, the financial statement assertion that is being tested, a description of the audit work being carried out, how the sample was chosen to test, the outcome or conclusion from the work carried out, shown clearly who did the work by a signature and name, the date it was completed, and who reviewed the work at the completion stage. Any other documents that back up this audit program are then filed behind in this section as additional evidence. For example, copies of the bank statements, the bank report, and the letter sent to confirm balances, and a copy of the bank reconciliations will all be stored with the audit programs. The third section is the completion area of the audit file. This is where the final review is carried out and post-year-end audit procedures are carried out. All evidence connected to this work should be stored together here. The key areas of the completion stage are the final analytical procedures, disclosure checklist for accounting standards, summary of unadjusted errors, a record of adjustments made since the trial balance was produced, the subsequent event review, the going concern review, written representations, the draft financial statements, and a draft management letter or report to those charged with governance. Again, evidence needs to be thorough and conclusions must be clear in this section. The review should be made by a senior member of the audit team, and evidence of who reviewed the audit work must be shown. The audit file and all of the working papers produced by the audit team belong to the auditor. Access to the working papers is only permitted if authorization is given by the auditor. Some of the reasons for this are that some of the information held in the file will contain sensitive information about the client. They therefore have a duty to protect this. If any of the work is lost or stolen, it would need to be recreated in order to form an opinion. This would be at an expense. There is a risk of evidence being tampered with. This could affect the opinion being formed at the end of the audit process. All evidence must be kept secure. To summarise, ISA 230 gives guidance on what documentation is needed for an audit and how it should be managed. Documentation is retained for the current audit, for relevant information to assist the auditor and any correspondence between the auditor and the client. Documentation for the current audit is split between the planning, audit performance and completion sections of the audit file. Evidence collected relating to the audit procedures carried out is referred to as working papers, and must be sufficient and appropriate to prove the balance it relates to in the financial statements. Evidence who did the work and who reviewed it in the audit team must be present, and the documentation must be completed shortly after the audit report is signed. I hope you found this video useful. Thank you for watching.